Hey guys, welcome to another daily market review. I haven't done these ones in a while. My apologies. I've been kind of busy and exhausted from this project that I was attached to, but we wrapped. So we're back at this daily market review. It's gonna come daily as always. So it's gonna be the same deal. So I went into the New York Open, New York close, and I missed the whole session for the morning session because yesterday was a hectic night. Not yesterday, but Sunday night, which made me stay awake the whole night. And afterwards, during the day, I couldn't sleep for whatever reason. I was tired as hell, but not sleepy. So I passed out late on Monday while being awake more than 24 hours, and obviously I missed all my alarms today in the morning. But anyways, let's take a look at what happened throughout the whole New York session today. All right, so I'm gonna zoom out a little bit just to showcase these highs here. This is the high from Asia session, and I'm gonna zoom in there a little bit. All right, so the Asia high here. Do you see how clean it is? And it also lacks manipulation above here, and it's clean. This was not an SMT divergence, and obviously price was drawn into that level. And the fact that throughout the Asia and London session, the whole night, it never tagged that high. All right, that's why that high acted as a drawn liquidity for New York session. All right. But knowing this alone is not going to help you because you got to understand the narrative as well. Obviously, at New York Open, it is not likely to just like give one candle up there, right? We all know that. And to become a profitable day trader, you have to understand the narrative as well, which is, I think, the hardest part of day trading, honestly. All right, so here I'm going to look at the whole session from Monday to Tuesday Open. So here we have a first leg, right, from the low here all the way to the high. Hold on, let me change this. All right, all the way to this high from here you can take it, from here you can take it, doesn't really matter. It pulled back initially, and there's no smart money reversal. It's a sharp ejection. It pulled back initially and formed a divergence here at the lows. I will double check this. I'm not sure if this was a divergence, but that's how I remember. Let me see ES real quick. Alright, yes, 1 minute. And I need to clean the chart also. Alright, so here, let's see if that was a divergence. It's a big divergence like this. Not on the 1 minute, but it's probably 15 or 5 minute divergence. So even if you take it from all the way down here, the dealing range, it's diverging in premium, which means the asset that you're watching is stronger than it should. So it indicates strength basically. So for ES, take a look at the dealing range also for ES. ES is coming from discount, okay? But by just looking at the dealing range, you can tell Nasdaq is the stronger pair. Okay, so that's the first thing I want to dial down, and then it goes for second stage, completed overnight, overshot. Now we have a new. Oops, I did not mean to delete that. Now we have a new dealing range. Okay, now we have the second leg down from the high to low to SMT low. You have this dealing range this time. All right. These are higher time frame dealing ranges. I'm just looking at it on the 1 minute, guys, okay? And then we have NDOG literally right at range EQ, which means price will refer back to that because it was inefficiently delivered and it's range EQ. The first pullback is going to be down there. And as you can see, the first pullback, boom, came down to the range EQ. This is probably London, yeah, at 4 o'clock. So I'm gonna annotate, I'm gonna showcase the NDOG here. Put it on the chart just for the sake of today's conversation. It was not that important, but I'm just gonna keep it here so you guys can see what happened overnight. And so it pulled back, pulled back, pulled back. Range EQ was kind of flipped, and it did more damage to the south side overnight before New York opened. Right here, and came up for buy side. So it's kind of seek and destroy here. Okay, right in pre-market. So it's going from buy side to sell side, buy side to sell side. But look what happened after New York opened. Okay, now this is tricky. It is obviously easier to see it in the hindsight. Okay, I'm not saying it's easy to see. It is easier to see in hindsight. That's why we need to put in the work in the hindsight as well, because that's how we learn at the end of the day, right, guys? So seek and destroy here, but initially I mean, after all, it digged down to the south side one more time after New York open. Okay, that's showing you a market showing its hand. Okay, it formed a sell model after buy side taking this, failed, formed a trap, broke down, first fair value gap. Sell model is completed after New York opens. Okay, and look where New York opened, rejected at 9:30, 9:35 ish, I think. Dealing range EQ. You see that? That's algorithmic, guys. Rejected there, sold off, took the south side. As these are crazy markets, honestly. Like, if you're trading, please, I'm begging you, size down. Even I am not going to trade one mini contracts. I'll be sizing down to minis. I'm sorry, micros. Probably 5 after 5 pyramiding, but we'll see. We'll see tomorrow. I'll be live streaming. All right. So now we took that. Now that we took the south side, I'm not saying this is gonna be a long initially. Like, if you're watching market live, even if I was live streaming this, I wouldn't know that this is gonna end up being buy side delivery. Okay, in the hindsight, yeah, it is a buy side delivery, but at the time when you're watching this, you don't know that yet. Okay, so turtle souping this low is not the best thing you can do for a couple reasons. Okay, even if you have a long bias, it's not smart because of the market conditions, because every 1 minute candle is going to be 20, 30, 50, 60 points. Okay, and like here, for example, if you say, let's say you turtle soup that, look how much it's digging down. 50 points, guys. That's a lot. Okay, do not turtle soup these things. Instead, you can turtle soup the range EQ retest for second leg, not first leg initiation. Okay. All right. But here's when I would have changed, when I would have got a long bias instead. South side is taken out, market accumulated here, flipped here, the fair value, CIBI. And what is it doing, guys? It's forming a trapped short. So at 9:30, at the opening range, the 30-minute opening range, it is trapping shorts, which means the algorithmically speaking, market is setting a low for the whole New York session. Okay, now we have a trap here. Sorry, I don't want to be annoying. Trap shorts, and the displacement afterwards telling you the story, guys. Okay, and there is double fair value gap here. You can do a couple things if you don't want to enter right away. First, the lower fair value gap will be what? It's going to be IFD, you know that. It's Thor bread and butter. Or there is this trap fair value gap you can use. Or you can take a look at the short-term dealing range from low to high, and you can take a long at range EQ. This is going to be the most precise way, but sometimes you're going to be missing moves if you do this. And it goes for the buy side here. The first buy side is tagged 9:30 buy side, and then all the way up to the Asia high. It delivered at 1 o'clock. Okay, but I'll get up there in a minute. So let's read this order flow first. Trap formed. SMT, not SMT, sorry. Fair value gaps are being. Oh my God, what am I doing? Hold on, guys. 1 second. I was cooking some bunch. I had to turn off the stop. All right, so let's make it gold. Fair value gap is being respected. Another rally. At this point, if you miss this fair value gap, you got to let this go, okay, guys? Because this is the first fair value gap retest. Otherwise, if you are late into the move, okay, two things can happen. First, you'll either get stopped out in late fair value gap, okay? Two, if market decides to pull back here, you're gonna get stopped out again, because the likelihood of you entering your late entry will be in premium is more likely than not. Right? So market stalled here. Hold on, let me pull up ES. I don't know if there was an SMT divergence somewhere here or not, so I gotta take a look at that. As I said, I was not watching the price action in the morning. I was sleeping, unfortunately. I wanted to trade it out, but you know, it's what it is. So yeah, here it seems like there is a 30-second time frame SMT divergence between these lows. Not a 1 minute though. And delivers the buy side. Now, once the buy side is delivered here, now you can take a look at dealing range, okay? Because you're anticipating a second push. Market always delivers second legs, all right, guys? The third leg is somewhat doesn't have to happen. It doesn't have to happen. On trending days, it'll happen, but on range bound days, whatsoever, like whatnot, it's not going to happen. The second leg is the last push usually. Now here, the range EQ never got tested. Let's see if it diverged in premium here. I'm reading the lows. Sorry, I don't know why I'm singing Final Countdown. It did not. It seems like it did. I mean, it's gonna feel forced, but like NQ is printing equal lows. Again, this is not on 1 minute, but 30-second probably. Nasdaq is making a high low. That's a divergence that I wouldn't rely on personally. You guys know my trading style already. I wouldn't rely on that personally, but here's what happens there. Let's get rid of the SMT for now, all right? And this dealing range, old one. So here, price accumulation. Let me copy this. Price accumulating in premium right below a base SCB. Okay, once that CB is inverted, now you have a trap fair value gap. All right, same deal as here. And look, 1035 high, 1035 candle. Let me zoom in. 1035 candle flips, and the second and the candles afterwards retests and rally. All right, this is basically another push, and then market forms another high here. It stalls, as you can see. It starts consolidating here, which means the high here, or maybe if it turtle soups it didn't here, but it could have. That'll be the first legs, or this leg's dealing range. So that's established here. Maybe if it diverges up there, let's see. There is no divergence with that high. There's a divergence afterwards though here. So that confirms the leg getting completed. Here's the dealing range, the new dealing range. Market pulls back. I mean, you can also trade pullbacks, guys. I'm not against it. I gotta make that clear. I'm not against trading pullbacks, but if you're trading pullbacks, you have to have the dealing range EQ on the chart, and you have to take partials and then stop. Put your stop at break even. Otherwise, this could have reversed here instead of digging more. All right. So here, let's see what happened there. So price pulled back, displacement. The first displacement after SMT is always an entry, guys. Okay, and it's a very good entry because your stop loss will be small, and you're usually shorting in deep premium and longing in deep discount when you take a fair value gap right after an SMT divergence. That is the best execution in ICT community, like the best. Okay, come on, mouse, don't act up. I mean, in this case, the stop is fairly large, but considering the market conditions, it's what it is. Like, you gotta get used to 4 to 30 point ranges like this. But anyways, let's take a look at it. What happened here? SMT diverged, sold off, right? Tested the range EQ. Here, there's another range. Retest the EQ. Now this EQ, if it fails, it's going for the sell side. If it doesn't fail, you're looking for the buy side. That's why bias is important. If you have a long bias, you don't have to use this. But if you have a short bias, this is your entry, guys. Okay, and goes for the sell side here. Now the sell side is taken. Sell side is taken out there, forming another trap here. Displacement right away. Now with that displacement, guys, this becomes the OB. Okay, why? Because the sell side is taken, and now you have a bullish displacement. Now this is an order block. You can use the order block. You can use the fair value gap. Some call this unicorn. This is still in discount, so I'll annotate this as discount fair value gap. As you can see, it's right below the range EQ, and it delivers buy side here. All right. I did not mean to do that. Goes for the buy side, but ultimately reaches all the way up to the Asia high. Okay, this is Asia high. Now let's take a look at this leg though. Okay, I want to look at this leg. Now, market pullback completed here. Now we have a new dealing range here. All right, we have a new dealing range here. It popped in. I'm gonna clean this. I'm gonna clean the old stuff. All right, we have a new dealing range here. It did not retest the range EQ or discount. There is a reason. It diverged here. This is a bullish SMT divergence. This is where I started watching the price action, by the way. I woke up pretty late, but I was able to secure this position. So here I'm gonna pull ES to showcase the SMT. I'm not bullshitting. Right there. Okay. So what this indicates is you gotta ask yourself, okay, if this asset is, you have to answer this question. If this asset is diverging in premium without getting down into range EQ, what does it mean? Okay, I'll tell you what it means. It means strength. Okay, now let's take a look at it. SMT diverges right after SMT. It forms what? Fair value gap, and that's a breakaway gap. How do I know it's a breakaway gap while I was reading? Because the down close candle. Okay, that down close candle, you gotta trust that. And it forms another. So once this displacement occurs after the S&T, now you can enter safely. Here's the second fair value gap, and it rips off through the Asia high. Okay, you can also use NWOG if you want to. It's not the same thing, honestly, because that is, I think, NWOG retests or something. Yeah, it pops up. NWOG CE retests, rather, mean threshold. So that's completed. Now you have a new dealing range from SMT lows to this high. This high formed a bearish SMT. I'll showcase in a minute. This is the dealing range. This is like, at this point, it is, so during the New York session, first leg, second leg, third leg, and fourth leg here. Okay, now that's the last leg is going to be a fifth leg. There's a reason for that, and I'll be talking about it in a minute. Let me just cover the 1 minute order flow first, then I'll hop onto the idea of the other legs. This is just legs on 1 minute though, alright? Because you know, you gotta understand which time frame this is going, like which time frame is the distribution, which time frame is the expansion. You gotta understand that. If you know that this is going to be an hourly expansion, like right below here, you'll understand why this is forming more than 2 legs on the 1 minute. Okay, in this case this was an hourly expansion, and I'll talk about it in a second. So here I'll showcase the bearish SMT also, because I'm not bullshitting. Right about there, yes. Here, not there, sorry. There. Is it this high? This high. Okay, one of those. Alright, bearish SMT right there. This sends price. Oh, what's happening? Okay, this sends price all the way down to where? Range EQ. What's there? Fair value gap. The discount portion of that fair value gap is your main concern. Okay, respected, and then it delivers This is our, at this point it's above Asia high. It digs more and more and more. It, in this case here, it failed. Okay, let's take a look at why it failed. So look at NAS, look at ES also. This is, it formed range, it formed an SMT divergence at the range EQ. These manipulations at this point are normal that it's happening this often, because again, this is the fifth leg. Like five legs in one session is a lot. So because of that, it is manipulating more and more. Like almost every pullback has a manipulation. Now what I mean by manipulation is basically a divergence. Divergences are manipulations, guys. So it comes down here. Why is it manipulation? Because it's violating all the PD arrays, fair value gap, order block, and all that. Like gets violated. Okay, that's why it's manipulation. But anyway, so it diverges there, bullish divergence, sends it to the buy side, takes more, fails. Now that in that failure, look at ES also. It does not diverge until the last push. Okay, this last push is the bearish SMT divergence, and it sells off almost immediately, almost. But more importantly, there is something way more important than this divergence. It's when did this occur? Okay, when did it occur? Now, time aspect of the market, which is the most important thing. Now let's delete this also. Look at the time. 250. 254. Okay, 254, it's forming a divergence. What that means is it is setting up something for the hourly close and the next hourly open. Okay, this is the most important part of this. And another thing is, which high was it? Hold on, 1 second. Not that one. Hold on. I wanted to make a point here. I forgot though. I'll drop it when I remember. Okay, the time aspect. If it is diverging right before hourly close, okay, the first displacement means, so here is the first displacement means market is going to low resistance run to set up the hourly close and hourly open. Okay, time aspect. And remember, the buy side is completed. Okay, and that buy side was the hourly expansion. So the fact that the market algorithm is speculating around hourly open and hourly close is pretty normal, because today's whole session was around the hourly time frame. Okay, and I will be talking about that shortly. So divergence displaced almost immediately, tagging what? Equal lows, which is SMT divergence. This is also smooth edges, original consolidation, whatever you want to call it. This is the sell side, and tags it almost immediately, which is a very massive move. Like from the first displacement all the way down there is 150 points, massive. And then it digs a couple times, so it forms 3 drives here. First low, second low, third low, pumps. That pump occurs to somewhere specific. You have the high, the low, dealing range, EQ. All right, dealing range, EQ, retest, rejected. Now there is a couple of things going on there. You can also take you can take the third candle, like this candle right here, as a short. That will be an aggressive entry. You can take the second one if you want to. That will be also aggressive entry. But what I would personally do, how I would trade this, would be, so now we have, hold on, this is the sell sign. Let me annotate that. Now here, it's rating about a bullish candle. Once it flips the low, that is your confirmation. So now you can go short after 328. This kind of closure. Now you can look for a short entry safely. Okay, because the rate candle, it's not going to get manipulated one more time. That's a manipulation already on a 1 minute basis. So this would be a safe entry with a safe stop loss. All right, targeting the sell side. That's the first way. The second way, you can use the OB open. Once the 328 candle closes and it retests the OB open, you can take that as well. And the second way would be after the raid, because there is a raid candle. That's the confirmation of the lower time frame already. There's a confirmation. You can use the old SIBI for your entry as well. Now you can do a couple things here. You can, I don't know, market fill at CE, high, low, anything is okay, but the only thing you have to do is your stop loss has to be above the raid candle high. There's no other way around, guys, unfortunately, because it's not displacing. Okay, so personally, how I would take this is I would use this CB after the raid. I would use the CB. I would wait one candle to close outside. So this one, 336. Once it closes, then I would fill the next candle. Here, this is what I would do. That candle, I would fill that. Stop loss, that's the main problem here. Probably I would use this one right here because it's outside the CB and it's not as close proximity as this one. So I would use that one. 28 point stop loss, pretty large for me. But again, I would definitely taken something with minis and micros instead of minis anyways. Maybe like 5 contracts micros. So still no displacement right here. It displaces. That's a pyramid entry. It doesn't even matter if it takes south side or not, because this is the last hour macro anyways. It's gonna dig more. This is the first CB. Does damage here because it doesn't have a manipulation, and sells off and closes somewhere here. Let's see if it goes for this low, but ultimate target is the trap shorts because that's the actual south side pool, liquidity pool. It tags it out at 404. This is the only setup I've seen today, the range EQ and the old CB retest, as a low resistance run. Now here, as this leg prints down like that, you gotta be patient, guys. You can't be FOMOing in any of those down close candles, any of them. Why? Because one retracement, like here, let's say you entered here, one retracement will fuck you up. Where are you gonna put your stop loss? Above here? Alright, 76 points. Are you gonna be able to handle that? Even with one micro, it's so unnecessary. Instead, wait for the second push, guys. Okay, do not FOMO into the first leg. You're gonna get your opportunity to enter and make money from the markets if you can be patient. So yeah, at 404 it completed the sell model basically. Could do more damage down here. We'll see. But I would say the buy side rally completed objective. It's objective. Tomorrow it could dig more into, depends on the lower time frame though. It could fill the weekly opening gap all the way. It's likely. I'm not sure if it's gonna do it tomorrow or Thursday, but this week it's likely. It seems likely. But at the same time, be aware of these lows here, guys. These are clean lows. I doubt it's gonna be left like that. I think market will refer back to there, and the fact that today failed, let's clean these. Today failed right after taking buy side here. It's kind of suspicious and looks better for bearish runs. Look how it failed there. This is manipulation basically. But we'll see. We'll see what overnight price action does. Then I'll be talking about this more. So I want to mention how I know this was an hourly speculation, hourly distributions. Let's go up to the hourly. Hold on, what's going on? Okay. One thing, just one simple thing, guys. Last leg, stealing range. Discount fair value gap. down close candle, both getting rated, swept, and 9 o'clock candle, this one closed up close. Okay, that's an up close candle, which means where's that tool? Okay, here. Which means once this closes as an up close, this is rate candle. Alright, and the candle before it, the down close one, it's gonna act like an order block. Right here, OB, retest, pump. Where does it go? This time frame's buy side. This is the second leg push, second stage reaccumulation on the 4 hourly. Okay, because this is happening on the hourly. That's how I know the whole rally from the morning session is just the second leg of the hourly. Okay, that's it. If this was occurring, Jesus, what's going on? If this was forming or just formed on the 15-minute or the 5-minute, I would be talking about more about those time frames, and I would be saying, oh yeah, I want to see the second stage reaccumulation on 15-minute time frame. But this one was on the hourly. That's why on the lower time frame, let me go down to 1 and zoom out. That's why you're seeing a lot of back and forth action. So look at this OB though on the hourly, and look where it rejected. Came down to the OB discount, BPR, range EQ, boom. Alright, you got to be patient. I always say this: if the expansions are on any time frame higher than the 15-minute, you have to be patient with lower time frame executions. You have to. There's no other way around. Now the thing is, 1-minute order flow goes perfectly or aligns perfectly with 5-minute and 15-minute expansions, but anything above that, you're going to be seeing a lot of big swings like this, and you'll be thinking like this is 150 points pullback here. After that is some T. This is another 60-point down move. If you don't know what's going on, or if you don't know which time frame that the expansion is, you're going to be thinking market is in sell model, but in reality it's actually retesting on the hourly time frame PDRAs here in this case, because the expansion, the speculation is going around the hourly time frame. I hope I'm making that clear. That's why multi-time frame analysis is very important, because if you don't know this is hourly, you're definitely going to be long in this fair value gap, for example. Alright, and then you get clapped. Why? Because it's manipulated. So this is going to end up being an hourly wick or something, or an order block, or a fair value gap retest, whatever the case is. Alright, so yeah. Anyways, guys, thanks for tuning in. Hope you guys find this insightful. Again, I'm done with that project that I've been working on in real life. So the market reviews are coming back for good on a daily basis. Yesterday I couldn't make it because like I said, I did not sleep at all. I was awake literally more than 24 hours. But yeah, I'm back. We're going full force. Let's get after it. Have a great day. Have a great night. And I'll see you guys tomorrow. I'll talk to you tomorrow, 9:15 EST. I'll be live. Make sure to tune in if you have time. If not, it'll be recorded anyways, so you can watch it later on demand. Have a good one, guys. Take care.